Dear students, online classes to first year BCom students, PPT presented by Vinay Kumar C, Assistant Professor, SVS College, Bantwal. Subject Financial Accounting 1. Today's discussion topic is Accounting for Professional. So, this is the second chapter of Financial Accounting 1. In last classes, we are discussing accounting standards towards accounting, and one topic we are left, that is accounting standards in India. So, in Indian accounting standard, we are going to have IFRS, that means International Financial Reporting Standards. So, this is developed by International Accounting Board, and it is a set of accounting standards for reporting different types of business transactions and events in the financial statement. The objective is to facilitate international comparisons for true and fair valuation of a business. So, uniform accounting policies and procedures, almost all countries have agreed to apply IFRS, but the name of IFRS has been converged as Indian Accounting Standards. Indian Accounting Standards is accounting standard notified by Ministry of Corporate Affairs and has wide range of convergence compared to existing accounting standard. Indian accounting standards are numbered in the same way as the IFRS. National Advisory Committee on Account Standard, that is NACAS, recommended this standard to the Ministry of Corporate Affairs. Now MCA, that means Ministry Corporate Affairs, has spelled out the accounting standards applicable for companies in India. 41 Indian accounting standard, this shall be applied to the companies of financial year 2015 to 16 voluntarily, and from 2016 to 17, that means 2016 and 17 on a mandatory basis. So, Indian accounting standard number 1, it relates to presentation of financial statements. Accounting standard 2 refers to inventories accounting. Similarly, accounting policies, construction contract, income taxes properly, that means property, plant and equipment, lease, Indian financial reporting, impairments of assets, provisions, intangible assets, investment property, agriculture, like that. There are 41 accounting standards we are having in India, and currently we are using IFRS standards. Anyway, we are move on to the next chapter, chapter number 2, accounting for professionals. So, here there are certain institutions whose main object is not to earn a profit, but to render valuable service to the society. So, accounting for professional is relates to non-trading concerns, that means not for profit organization or those organizations which prohibit the payment of any profit to their members, and also are formed for the purpose of promoting art, science, religion and any other useful objects. There are two types of non-trading concern. One is concerned with profit motive, another one concerns with without profit motive. Okay. Example, educational institutions, sports clubs, trade unions, charitable institutions, educational institution, temple, masjidis, etc. Anyway, the profession are such as medical practitioners, lawyer, chartered accountant, architects are concerned with profit motive. Okay, now we understood concerned without profit motive, concerned with profit motive. So the professionals, they are concerned with profit motive, right? So there is no question of individual or joint ownership in respect not for profit organization. These concerns earn their reputation on the basis of their contribution to the society. Next, accounts by professional people. So what the professionals they are doing? Is it they are having the separate accounting? Yes, they are having a receipts and expenditure account. Who are the professionals? They are maybe the doctors, solicitors, architects, chartered accountants, like that. Simply keep a record of professional income and expenditure in a cash book, which is their principal book. The professional people prepare a receipts and expenditure account to ascertain their net income during the year. They keep the accounts on complete double entry system and extract the trial balance. And revenue account called receipts and expenditure account is prepared by professional. This account is different from income and expenditure account because later records outstanding incomes to professional people prepare their account considering income on cash basis. They ignore outstanding income. Okay. So under the preparation of receipts and expenditure account, so they are not going to consider the outstanding income because there is a difference between non-trading concern with profit motive, without profit motive. So with profit motive, that is professional accounting non-trading concerns, there they are not going to consider the outstanding income. This is important because when we are doing in the classroom, we understood what it is. So how it is differ from a non-trading concern without profit motive. So better to understand what I am telling. So outstanding income is not going to consider under professional accounting. And also the mercantile system is followed for recording the expenditure. All the accounting expenses are taken into account but ignore outstanding incomes. This is because they do not file suits for recovery of their dues. Okay, this is related to the cases somewhere they are the doctors, they are having that outstanding income. That means some patients they are not paying the money. Okay, they cannot claim. That means they cannot put a case against those patients. So like that. That is the example. So they cannot file the case against outstanding incomes. That's why they are not going to maintain outstanding income. So let us do the problem with the help of illustration number 1. And I am telling that the student should maintain the notes and you should write the theoretical part and then you take the problems one by one. Okay, today we are starting the first problem towards a professional accounting. So under this problem they are provide a receipts and payment account. Okay, so here Dr. Sinha commenced practice as an cardiologist investing 2,50,000 rupees on equipments. This is important. So how much cost they are incurred towards the investing in equipments 2,50,000. Okay, this amount maybe comes under balance sheet. Okay, so you should remember. On 1st April 2018, the receipts and payments for the year ending 31st/3/2019 was as follows. On the left hand side, receipts, they are fees 5 lakh, miscellaneous 1,000, sale of equipment 20,000. Similarly, on the right hand side, rent is 30,000, salary to the assistant 75,000, journals 10,000, library books 30,000, equipment purchase 40,000, drawing 1,20,000, and the balance is at bank 2,15,000, in hand 1,000. And also the additional information also given, 15,000 of the fee was still outstanding. Okay, and the equipment was sold and purchased on 1st January 2019. The cost of the equipment sold being 30,000, depreciation on equipment was 20%, library books 5%, salaries to assistants still payable was 10,000. So prepare receipts and expenditure account and the balance sheet as on 31st March 2019. So before doing receipts and expenditure account, shall we do some calculation? So calculate the depreciation. So I told that. So how to calculate the depreciation? So come to the point of investing in equipment, that is 2,50,000. So 2,50,000 deduct 30,000 for 1 year. 30,000 is the 20% on 2,50,000. Okay. So you are going to get the 44,000, and then 30,000 for 9 months is 4,500. 40,000 for 3 months is 2,000, and total depreciation on equipment is 50,500. So calculation of loss on sale of equipment. Cost of equipment is 30,000. Cost of equipment is 30,000. Depreciation is 4,500. That means 5%, 20%. And the cost on the date of sale is 25,500. Sales price is 20,000 and loss on sale is 5,500. Anyway, we will do this problem in next classes. So this is the solution, but anyway we will do the solution in next class. Thank you very much.